Hey everyone, welcome back. I hope you're doing well. Today we are talking about something that could touch nearly every household in the country, something that could change the way we think about paying taxes in America. President Trump has proposed a bold new idea, one that promises lower or even no income taxes for millions of Americans, replaced instead by money collected from tariffs on imported goods. It sounds pretty incredible, right? But as with most big promises, there is a lot to understand underneath the surface. Did you know that in the 1800s, America actually ran its government almost entirely off tariffs, before income taxes were even a thing? That little piece of history might just hint at where this conversation is heading. So if you have ever felt overwhelmed by taxes or wondered if there could be a different way, stay tuned because we're going to walk through what this all means for you, your family, and the future of our economy. And before we get started, I would love for you to leave a comment below and let me know, how do you feel about the idea of getting rid of income taxes and replacing them with tariffs? And if you find this kind of information helpful, please consider subscribing to the channel so you do not miss future updates. Now, let's get into what exactly is being proposed here. President Trump recently announced that he wants to cut and maybe even completely eliminate income taxes for Americans making under $200,000 a year. Instead, the government would collect money through tariffs placed on imported goods. Basically, it would be a shift from taxing what you earn to taxing what you buy. And the numbers Trump is aiming for are pretty ambitious. His team believes that if tariffs are set at the right levels, they could bring in enough money to replace the income taxes for most Americans. To help make this happen, new tariffs were already rolled out in April, including a 10% tariff on most imported goods and even higher tariffs on products from places like China and India. Now, on paper, this sounds like a win for a lot of people. I mean, who wouldn't want to see their paycheck come in without federal income taxes being taken out? You could have more take-home pay, a little more breathing room each month. And with prices rising the way they have been, that extra cash could make a real difference for a lot of families. But here's where it gets a little tricky. When we dig deeper into the numbers, a lot of experts are saying there's a big gap between the dream and the reality. The Department of Homeland Security reported that customs and excise taxes collected around $15.8 billion in April. Even if those numbers keep growing, many economists say it still would not be enough. For example, Peter Navarro, one of Trump's top trade advisors, predicted that tariff revenues could reach $600 billion a year. But when you compare that to how much the government collects right now from income taxes, just for people making under $150,000 a year, is about $576 billion. And that's without even counting higher earners. However, even if the numbers are close at first glance, there's a catch. You see, when you put high tariffs on goods, imports tend to go down. Companies and consumers look for cheaper alternatives or stop buying altogether. And when imports shrink, so does the amount of tariff revenue coming in. So, while $600 billion might sound doable if everything stayed the same, in reality, imports would likely fall, and that number could drop a lot. Some studies estimate that even covering just the bottom 90% of taxpayers would leave about a $65 billion shortfall. And that shortfall would have to be made up somehow, either through new taxes, more borrowing, or cuts to government programs. Besides, there's another piece we need to talk about, and that is how tariffs can act like hidden taxes on consumers. When companies have to pay more to bring goods into the country, they usually pass those extra costs on to you and me. That means higher prices at the store for everyday items like clothes, electronics, groceries, and even cars. And because lower and middle income households spend a bigger share of their income on essentials, they would feel those price hikes the most. So while you might get a bigger paycheck without federal income tax, you could end up spending more every time you go shopping. It is a bit of a balancing act, and for some families, it might end up being a wash or even leave them worse off. Now, if we step back and look at history for a second, there was a time when tariffs were the main source of government revenue. Before 1913, when the 16th Amendment introduced the federal income tax, America largely funded itself through tariffs. But it came with problems. Tariffs back then were criticized for being regressive, meaning they hurt lower-income families more than wealthier ones, and the economy was a lot simpler compared to today. Today, the US economy is so deeply tied into global trade that pulling back too hard could cause ripple effects we cannot even fully predict. Think about products like smartphones, cars, even the ingredients in your favorite snacks. Many of these involve parts or materials from all over the world. Adding big tariffs could disrupt those supply chains and make things more expensive across the board. Speaking of which, one of Trump's biggest arguments for this new system is that it would create more American jobs. The idea is that if it becomes more expensive to import goods, companies would have a stronger reason to move their factories back to the US. That would mean more manufacturing, more infrastructure, and ideally, more stable jobs. And yes, there are some signs that reshoring, bringing jobs back home, has been picking up speed, especially after the supply chain problems we saw during the pandemic. Companies want more control over their production. But even though factories may come back, it does not automatically mean millions of new jobs for workers. A lot of manufacturing today is highly automated. Robots and machines do much of the work, and labor costs are higher here compared to overseas. So while you might see some growth in construction and engineering jobs, it might not be the wide-open hiring boom that many people are hoping for. Another thing to consider is the political side. Public opinion on tariffs is mixed, and it cuts across party lines more than you might expect. A recent poll showed that 64% of Americans disapprove of Trump's handling of tariffs. Even among Republicans, about a quarter said they are not on board. You see, people are worried about higher prices, about trade wars escalating, and about losing access to affordable goods. During Trump's first term, retaliatory tariffs from countries like China hit American farmers and manufacturers hard. The government had to step in with subsidies to help keep some of these industries afloat. And next, if tariffs become the primary way the government funds itself, it could also make our economy more vulnerable to global shifts. If there's a recession overseas, or if trade partners start cutting back harder, our revenue could shrink fast. It is not as steady or predictable as income taxes. At the same time, you can see why the idea appeals to a lot of people. There is a natural attraction to the idea of not having a big chunk taken out of your paycheck every 2 weeks. It feels like freedom, like keeping more of what you earn. And especially for families who feel squeezed by inflation, taxes, and rising costs, it sounds like a lifeline. But also, the flip side is that tariffs are, in a way, just a different kind of tax. Instead of paying based on what you earn, you're paying based on what you buy. And if you're someone who already struggles to make ends meet, you might feel those extra costs more than you realize. Now, let's explore further where all of this could go. If Trump's proposal moves forward, there would have to be careful negotiations with trade partners to avoid escalation. Tariffs could be used more strategically, maybe targeting luxury goods more than essentials to protect lower-income consumers. Another possibility is that even if full elimination of income taxes does not happen, we could see meaningful reductions for lower and middle-income earners, funded partly by tariff revenue. That could still be a big shift, helping people save more and maybe boosting spending in other areas of the economy. So then, what does this mean for you? Well, it depends a lot on your situation. If you make under $200,000 and do not buy a lot of imported goods, you might come out ahead. If you depend on imported goods for your job or your business, or if you have big expenses that are tied to global supply chains, it could be more complicated. It is also worth thinking about how these changes might affect your long-term plans. For example, if inflation rises because of higher costs, the value of your savings might not stretch as far. And if the job market shifts, certain industries could see more opportunities, while others could struggle. Now, I would love to hear from you. How do you feel about replacing income taxes with tariffs? Do you think it would help your family, or would it make things harder? Share your thoughts in the comments below, because it is always great to hear different perspectives. And if you found this conversation helpful, or if you just like having a calm place to talk through big changes like this, please hit the subscribe button and join our community. We have a lot more helpful topics coming your way, and I would love for you to be part of it. Thanks so much for spending a little time with me today. Remember, no matter what changes come, staying informed and thoughtful about your money is one of the best investments you can make. Take care, and I will see you next time.